Good morning and welcome back to Almus Market Mornings. I've always felt that human beings are emotional creatures who are capable of rationality. And no, I'm not just speaking about the tweets of the President of the United States, but even markets, after all the geopolitical unease, once again turn their focus on what Chair Powell has to say during his testimony. Just like President Trump, even investors are trying to figure out the Fed's next moves. Market since yesterday has also seen a bout of dollar weakness. Euro dollar at its cycle highs. Even Asians are stronger. Yesterday, Rupee also saw a good amount of strength. Good morning, JK. A new cycle high for Euro. Rupee has seen good strength. We are also seeing some sort of strength in all other Asian currencies. What are you expecting from here on?
Good morning, Swaraj. Yeah, I think it's been a very significant week in terms of movements in markets. And why not? Because we had very big events also. Last few days we have been seeing the geopolitical events overshadow everything else, and that had created a risk of trade. In currencies, INR, then oil price rallying, and gold price also testing 3,400 levels once again. But all that the climax was on the weekend when U.S. Bombers neutralized the underground nuclear facility of Iran. But since then, there has been positive developments. Ceasefire has been announced by Mr. Trump between the two warring factions, and although there were initial violations report, both countries have since agreed to abide by the ceasefire agreement. So that is a big positive factor for the market. And then, of course, from there, market has swiftly moved on to monetary policy and economy watching, particularly the former, because we have, also mentioned in the last updates how some of the Fed members are getting quite dovish. And the biggest Dow statement came from Valor, who said that he is open to a rate cut even in July. That's the next meeting by Fed. And it has been followed by Bowman. And then, of course, yesterday we had Jeremy Powell himself testifying before before the Congress, and he said that if the inflation pressures do not remain contained, we'll get to a place we will cut rates sooner rather than later. Rather, he is saying that if the inflation is not as high as they thought, they could cut rates sooner rather than later, but they wouldn't want to point to a particular meeting. And he does expect inflation to move up in the summer, so he's just defending his action of the rate cut being postponed. And he also said that to a pointed question, if there will be a 0.5% cut in September, he said if the rate of change is along with the unemployment rate. So meaning that if unemployment rate goes up, then the rate cuts will be even higher. So that was also kind of comforting to the market. I think slightly less hawkish than we have been hearing from him. Of course, then John Williams, another influential member, said that uncertainty and tariffs relate to restrain spending and reduce immigration, slow labor growth. All these factors, he is expecting it to contribute to lower growth of GDP this year, considerably lower from last year's pace, and he expects unemployment rate to rise to around 4.5% by the end of this year. So, and also the tariff enacted will boost inflation slightly, and then it will gradually decline to 2% over the next year. So he's not expecting inflation to move beyond 3%, but it will eventually decline to 2%. Indirectly, he's again supporting, dovish approach by the Fed. Of course, there are a couple of other members who were somewhat neutral, but I think the more and more members are now looking at adopting a flexible approach to rate cuts. And of course, we also know that the Trump government itself, the latest pressure coming from Vice President Vance, that Fed should be cutting rates much faster. And so reacting to this, of course, Fed fund futures now pricing 60 basis of points cuts this year, up from around 46 basis points before we had the influential comments from Valor. Of course, the uh, confidence data, consumer confidence data from US was another factor. It was expected to rise to 100 from 98.4, but it actually fell to 93. And that was another factor for yields falling yesterday. US current account widened 138 by 138 billion to 450 billion in one quarter. So that means you can say that by extrapolating it, it could be 2 trillion for 1 year. And this is also not good news for the dollar. And German business on the other side, German business morale improved. So the contrast between the US and at least the German and the Eurozone economy has been, quite stark. We are seeing some steady improvement from Europe, and particularly in Germany, who had been in a recessionary situation for quite some time. So that's not surprising that it has pushed the dollar down once again. So markets have seen, a spectacular unwind of oil trade. We had seen oil rise by about 15%, more than 15%, in fact, just in the last 15 days. But the entire move was erased in the last two sessions, from around 81.40 Brent fell to around 66 in two sessions, and that's a very large move and perhaps unprecedented, I would say. So along with that, we have seen the yields also fall to 1.5 months low as far as the 2-year treasuries yield is concerned, and it is now at 3.78%. Stocks, not surprised to see the rally in stocks, both the yield falling, dovish comments from Fed members, and the easing of tensions all have led to, again, all-round rally in the stocks. Now, as you said, euro rose to its highest level since October 2021, but the dollar index has not made a new low. That's because we know the dollar yen is still staying above 144, closer to 145. This is despite the fact that yields have fallen. Dollar yen has not been responding, but we have seen some rally in the risk currencies like Aussie dollar. Chinese yuan has been once again steady. It never went below 7.17. I mean, just a fleeting moment. It went down, went lower, but it's still holding around 7.17 levels, despite lower fixing by Chinese authorities yesterday. So overall, dollar has been trading weak. Now, what we have to be aware is that dollar has moved significantly in the last 4 months, ever since Trump took over and his tariff policies were announced. And now we are at a crucial level, of a 4-year low for the dollar, or a 4-year high for the euro. From here, we have to see who moves next and what triggers the next move lower for the dollar. I wouldn't be surprised we get into a long period of consolidation, not a big fall in the euro, or not a large rise in the dollar index because the fundamentals don't support it, but perhaps the positioning in the market and technicals won't be surprised to see some a month of consolidation, barring any big news in the markets. Rupee, yes, again, fantastic rally in the rupee. Just 2 days back, people were staring at 87 being hit on, or perhaps breached, but then the geopolitical development, and particularly the oil price, which had been the main driver of USD INR higher, from 85.50 to 87, almost 87, retraced completely. A gap down of more than 60 paisa was seen yesterday, and remained under pressure as dollar index hit its lows. We have seen it breach 86 in the offshore market, and sustaining the low. Also helping the rupee has been a very large inflow that's expected to one of the largest IPOs in the Indian market, HDB Financial Services, and so that's again another factor. I think overall, rupee did not have too many domestic causes for weakening, but then it was all led by geopolitical factor. So now that easing, oil coming off, flows expected, and dollar index at its lows. I think we can expect a rupee to gain some more in the coming days. 85.50. Only two factors that can restrain it from gaining too much is the Chinese yuan, whose movements rupee generally tracks closely, is not really showing big strength. And secondly, the still unresolved trade negotiations, which is not really seen any tangible progress among major countries as well as India. So the July 9 deadline is also fast approaching, so markets will be cautious about getting too carried away. So this flow-related inflow can help rupee strengthen further, but it can reverse quickly above 86 in just before we hit the July 9 deadline for tariff negotiations. Yes, as I shared yesterday, we have GDP data from US tomorrow, expected minus 0.2%. PCE core inflation, again, a number that Fed watches very closely. These are the events that we look forward to. Yes, I think we are back to watching economy now, and geopolitics is in the background. Thank you.
Thank you, JK. And just quickly summarizing, it seems that some Fed members are getting more and more dovish. Fed member Waller and Bauman seem to be open to rate cuts. Powell also in his testimony was a little bit less hawkish, though he mentioned the quantum of cut would depend on the unemployment rate. Fed fund futures are now pricing 60 basis points worth of cut this year, up from about 40 basis point of cuts. On the data front, we had the US consumer confidence, which fell quite sharply. Yields also fell after that. Dollar index, though, one important statement with JK Min, dollar index has not made a new cycle low as your dollar JPY holds. Even in Asian currencies, Chinese yuan remains quite stable. It was only the euro dollar which made a new cycle high. Rupee saw a good cool off against dollar after the oil prices fell and geopolitical tension subsided. Dollar rupee fell below 86, sustained that level even in the offshore markets. IPO related flows should keep the possibility of further gains open. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.